Hello, Usi. Hi, Cedric.
Hello everyone.
Hi, Jonathan. Hi,
Oh.
Cedric. People are joining
Hey.
in. Let's give it 59 seconds and we jump straight into the final day of Tarava in Partnership with Human Planet webinar series.
Great.
Are you excited being this is the final day? Are you excited about that? You see, Cedric?
We are excited. I am excited. The past 2 days were very well. So
Hmm.
now let's see
So,
today.
as usual, to our community, please head over to the comments, the chat box, and let us know where you are joining us from. We'd like to see some familiar names and keep the conversation going.
Okay, great. So I think we can start.
Yes, we can
Yeah.
jump straight into this. So go ahead, Cedric, over to you.
Perfect. Thank you. So this is the last day of the webinar series. Thank you for joining. So today there is no speaker. We wanted to deep dive a bit for on climate projects and carbon projects. So how to fundraise and also what is the key around what makes a good carbon project and climate project. So yeah, it's more like a presentation. Today it will be a shorter session because we don't have a speaker. We wanted to deep dive and we'll give some more time to questions if there is any questions. So the session might be a bit shorter, around 30 minutes. We will recap a bit what we discussed for the last two webinars and discuss more about mobilizing capital. So yesterday we had Clinton on the call from Kumi Analytics who explained on digital MRV. The day before we had Camila from Airbus who explained what a corporate or an investor is actually expecting from projects. Um, so I think what was interesting from Camila, it was really, specifically for the big investors, they really want to see integrity, projects which are well defined, and what Clinton said around having the right monitoring system in place and the interaction with communities was very interesting. So today we will deep dive into what makes a good carbon project. Feel free to share in the chat where you are today in terms of projects. If you are at the initial stage, if you are fundraising, if you have already an investor, if you have already projects launched. Happy to get more insight. Also, I forgot to mention that this webinar is actually during the launch of the Terava Accelerator, so the Climate Solution Accelerator. Ursi, if you could actually post the link for application um, if anyone wants to apply to the accelerator, we will explain a bit more about the accelerator after. Also, we'll share a link if you want to book a consultation with the team. Feel free to do so. So, when we speak about climate projects and fundraising, there are several types of fundraising that you can hope to to unlock. I think the first one is actually the grant. When you have a small project or you are at an early stage, is something that is very interesting to get for the grants. And after, when you go up, you actually go into different layers of financing, so concessional, debt, carbon prefinance, or equity. The one which is the most, I mean, the kind of what everyone is trying to get is actually what we call the carbon prefinance. So carbon prefinance is actually when you secure the carbon credits in the secure enough tech for carbon credits, which means someone who will actually buy the carbon credits in the future. And that means you have a stable revenue which has been secured because you have someone who will buy the carbon credits and you can actually uh, fundraise because you can demonstrate stable cash flows in the future. So you can go to a bank and fundraise pre-financing. And sometimes even the ones who will buy carbon credits can also sometimes invest upfront. So this is what we recommend. In terms of selling carbon credits, actually there are several ways. One is to sell carbon credit on spot, forward carbon credits, or pre-finance. So when you sell carbon credits on spot, that means you don't wait to get someone to buy it. You go, you do your project, and when you have the project carbon credits in your wallet, you just sell it through brokers. Uh, After there is what we call the forward carbon credits, is actually uh, carbon credits you sell before it has been issued. Um, and this is very common as well because people want to get access in advance. And pre-finance is what I mentioned, is when you get the cash upfront to fund your project in exchange of carbon credits. So what is actually complex in the carbon finance space is that carbon credits are different and there is different types of pricing, different depending on the level of the sector. So if you develop a cook stove, for instance, it's not the same price as developing a mangrove, or it's not the same price as developing a biochar, for instance. So biochar and what we call engineer removals are the most expensive. Um, Today, because they are the ones which actually can capture and can be scaled. So usually you can have from $100 to $150 per ton. And after, if you go down, mangrove is also very high in terms of finance. And the last one is actually what we call avoidance. So avoidance and removal are two different things. Avoidance is actually when you avoid emission reduction. So you can replace with clean energy, for instance. But removal is when you capture. So for instance, mangrove is a carbon removal because the mangrove will capture the carbon credit. So it's very important to know actually which type of, what is your sector and what price you can expect from the market depending on your project. And when you start to pitch to investors, they will actually test and they will probably challenge you. And also their interest is to negotiate, so to be able to have arguments for against your project. So you need to be very strong on several things. One is the volume. So when you work on your project design document, you need to be sure that you're about the volume, that you can deliver the volumes. Second one is the pricing and also the cost. Actually, the cost is very important because you need to be profitable. And sometimes some technologies, um, if you look at the revenue generated by the project, either it's not enough or it takes time to scale, right? So if you are in this situation, for instance, for a reforestation project or even a mangrove project, it can be a very interesting project, but it will take time to get funded. So you need to be very confident about the cost so that you have it under control. And actually, you might need working capital. For instance, I will take the example of reforestation. When you plant the trees will take time to grow. And what it means is that at the beginning, you won't generate many carbon credits because you have small trees. When it's grown, after 5, 10 years, you can reach the maximum carbon credits. But in between, that means your revenue are still a bit low, so you need working capital and you need funding to be able to do it. So we have indicated some cost actually per type of project. It's just an indication, but it shows that for each carbon credit, when you sell it, there is some cost, which is linked to the credit. So yeah, so if we go through the questions actually that you will probably face when fundraising, I think the key one is also that we mentioned, I think it was with Camilla, uh, around the additionality of the project. So are you additional compared to business as usual? And what is the impact specifically in terms of additionality also for communities? So it has to be very clear and clearly explained because you will be challenged when you try to register. The second point, who will buy the carbon credits and at what price? So it's very easier, much easier to fundraise if you have already secured an offtake and the buyers for the carbon credits. It's not something which is easy. And sometimes we see project developers trying to fundraise very aggressively and not spending time on offtakes. You actually need to spend time on offtakes and on buyers of carbon credits, even before fundraising. Number three, the MRV, as we mentioned with Clinton yesterday from Kumi Analytics, the monitoring, reporting, and verification plan has to be very solid because for the investor, it's really what will allow them to verify the integrity of the project. So as we have seen yesterday with Kumi Analytics, if you have satellite imagery to show really like pixel by pixel and meter by meter that each tree, the quality of the forest is improving, and you can really show it on your investor in details, it's much more confident compared to someone who would do it manually, who would send a consultant on the ground, and who won't be able to have the full picture. So MRV now it's really a must if you want to be able to fundraise. What goes wrong, which means what could be wrong. So again, in forest, you can have fires. You need to have some plans, mitigation plans. If you are in a country where you need to secure a letter from the government, but politically it's not very stable, it can be also a risk. So all these things have to be really assessed. Because the investor will know it. And final one, which actually might be the first one, the team. You really need to show a team that can generate, that can deliver the project, which means technically to know how to assess the carbon emission reduction, and also the implementer on the ground. So if you want to do a mangrove project, for instance, it's better to team up with an organization who has done mangroves before, because they will know what type of seeds, the impact of the of weather and all the things that can go wrong because they have done it for many years. So this is really like the best practice. And if you have each of these items solved in advance, thought through, it's much easier when you are very solid when you go to the investors. If we look at the red flags now, so what will turn off an investor? I think the first one is vague volumes. So really work on your calculations before going to investors. No offtake plans. I know it's difficult, but you actually need buyers of carbon credits. It's really something you need to spend time on. And it's not necessarily big organizations. It can be also some foundations, at least a minimum offtake. Methodology rational. So here you need professional advice, unless you have already a team in the house, but the methodology is really the key. So you can't have it wrong. Community plan, of course, it has to be done, and it has to be done in advance. So the community plan has to be set up, and you need to have interactions with the community before starting the project, because sometimes it's done after, and if you don't do it, your project will not qualify. Single point of failure and founder-only team. Again, I know it's a bit costly sometimes, but it's best to have a solid team with professional around you to be able to have something solid. Okay, so quick one on negotiations, because I know it's not easy when you are in front of an investor who has the money or in their hands, and they're in better position to negotiate. Just a few things. I think there are a few points that you don't really need to negotiate. The tenor, the structure, if they're asking for more security, package, etc. But there are a few points where you can actually negotiate, uh, and there are some ways to do it. So I think the first one is the pricing. Um, Usually they will be aggressive and they will ask for low price because they want to get access to low price. What you can do is actually to have something which is phased, starting with higher price and after going down so that you can benefit from the upside also. Another mechanism, if you work with a broker, it's also to add a clause where if they buy it and they sell it to someone else, you share the profit with them. So you could say, like they will buy at $5 and they will sell it in the market. And the margin, if they sell it at $10, you do 50-50 with the buyer, with the broker. It's something that can be done. It's much easier than just selling it for $5 because it can be quick money, but they will make all the profit after that. MRV, you can go through milestones, escrow accounts. So if you work with traders and brokers, they are used to it. But it's really recommended to work with escrow accounts because you are transferring carbon credits or properties, securities, and getting cash in exchange. So what I would recommend is actually when there is this type of transaction, ask the buyer or the investor to put the cash on an account, on an escrow account, so that you can verify the cash is actually there. And after you transfer, and you go through an intermediary bank, so to be sure you don't have any surprise, because if you actually transfer the carbon credits, they could come up with something which is, something could go wrong after. So you need these escrow accounts to do it and negotiate with community payments. So, and also the government, if you have any revenue sharing with the government. So on this one, it's really good to see what is needed and to have a good discussion. The government, usually they might be asking for um, a high revenue sharing. So you have to show them that the bank project won't be bankable if it's too high. And for the communities, um, if the project generates a lot of cash flow, sometimes it's just providing the cash to communities. Maybe it's not the best option. You can provide schools or support. So you have to see how you share benefits with communities. Yeah, so this just summarize what I mentioned before. Really, you start by the grant when you fundraise, and after you go up to the equity and the debt, and you have some tools in between. I won't go too much in details. So just at Terava and Human Planet, we have done it, in the past. We did share yesterday and the day before some of our projects. So the one in Chiapas again that I will share again to explain a bit, so a mangrove project that you see on the left, which is in the area of Chiapas, where you have actually communities which are involved in the project. We also have an investor in place, revenue sharing, all the things that have been that I explained before. We have been through it. So this one is great. And what you see on the right is a banana plantation. And we are actually so this is an engineered biochar project where we collect the waste from the plantation and we generate biochar. We give the biochar back to the farmers and we issue carbon credits. So biochar is very in high demand today because it's carbon removal. And and even on our side, we are actively looking for biochar projects. Yeah, so quickly on the accelerator before I open to the floor to questions. The accelerator is actually something that we are launching to support project developers, entrepreneurs, companies to launch carbon projects. It's a 5 months program. We start with the discovery, we identify the methodology, we identify, what is should be the MRV, we work on the project design document together, the business plan, and after we have a demo day. So the idea is really to go fast. Uh, every month is a sprint for each thematic. And at the end, we aim to secure investor and offtakes for the projects. If so when we secure meetings with potential investors or buyers, usually it's around 30 minutes meetings. You have 10 minutes to pitch. There will be some Q&A. We will be there with you. And the pitch day will be with several investors in the room. This is something that will be at the end of the call, of the event, of the accelerator. So what you bring and what we bring. So on your side, so we actually select the projects because for us it does not make sense to bring someone in the accelerator if there is not a good fit. So we need at least someone or an organization having a concept in mind, a site identified, a commitment to be part of the accelerator, and the right connection also to make the project happen. And on our side, we will bring the methodology, the capabilities, we'll work on the financial model, and of course the network of investors to get the project funded. So yeah, I think at the end of the webinar, we have spent 3 days together. It was great. 3 points that we want to, some takeaways for you. Just the first one is market rewards the integrity. So really try to ensure that your project is serious enough and you are able to demonstrate the integrity of the project. Also build the project and then the pitch, which means you really need to have something tangible and solid on the ground before pitching it. And even sometimes it happened to me where we secured deals without project. I mean, without pitch. And the last one is around credibility and how to unlock capital. So yeah, so your reputation is first, and the credibility is really a question of trust that you build with the investors. Perfect. So I think I will stop here. Jonathan, if there is any question in the chat.
Yeah, absolutely. Thank you so much for that presentation. Very helpful. And just to re-announce this to our community, if you have question, please head over to the Q&A icon and send your question to Cedric. So what we do again, as I mentioned on yesterday call, we send an email to our community and ask them to send us question if they cannot join the call. So Cedric, we do have a couple of questions. I'm going to read them out to you. There are more questions, so just let me know if you have time to cover all of them.
Yeah.
So I think this first one is from James, from the UK. I cannot join, I'm sorry. But I need to know, when should a developer walk away from an investor conversation? What are the signals that the conversation is not going to close, even if it feels positive?
Can you repeat? Sorry, I didn't get it.
There's a question from James. He said, I'm sorry, I cannot join to this webinar. I have a meeting, but I need
Okay.
to know, when should a developer walk away from an investor conversation? What are the signals
Yeah.
that the conversation is not going to close, even if it feels positive?
Yeah. Yes, exactly. So I think when you are the project developer, you have to be strong as well, because it's very tempting when someone comes to you with a promise of money, and sometimes they don't always have the money actually. And you have to identify sometimes some red flags um, about potential investors. I think the first one is that they will do a due diligence on you, but you have to do also due diligence on them. So you can ask them questions about their previous investments, some KYC as well. And if you can't find a lot of information about them on the web, it's usually not a good sign. So this is one. And after, you will see that if they start to negotiate with you with very strong demand and they start to play like they have other discussions in parallel and it's take it or leave it. It's better to sometimes to leave it and because sometimes they are pushing just to get the best deal out of it and it's not in your interest. So yeah, so I would say these are the two or three red flags. And also if you see that they are not asking for very technical or detailed questions, uh, it might be a red flag as well. So you want capital in your project, so you want funding, but also partners. So that's why what we do on our side is that when we do fundraising, we prioritize funders who have actually funding available, but also bring additional value in their network. So it can be expertise, it can be access to suppliers, etc., etc.
Thank you so much. James, you cannot join us today, but whenever you're watching this recording, I hope Cedric answered your question. If not, feel free to reach out to Cedric at humanplanet_.com. So this one is from Patia from India. He said, Dear John, I cannot join today. I have a meeting. But could you please provide answer to the following question? The first one say, looking at the climate capital landscape over the next 3 years, where do you think the most underpriced opportunities are? A follow-up question, where would you be putting your time if you were if you were a developer starting today?
Yeah, so I think if you look at the market, climate finance specifically, the focus is really around nature-based solutions today, which means reforestation, mangroves, regenerative agriculture, sustainable agriculture. This is where the focus is. I would add also biochar actually, in terms really like carbon projects. So definitely this is where I would be, I mean, we are actually working on. Before we had a lot of momentum in renewable energy, cook stoves. So it's still in demand, specifically cook stoves. Um, but this is what we call avoidance. It's not what we call removal. So removal projects, which actually capture emission reduction, are in higher demand. And after, in terms of geographies, I think it's there is no priorities. Latin America, Africa, Asia, even in Europe and US, actually, we see offtake agreements being signed. So yeah, it's really around the quality of the project, which is are you really capturing carbon and speeding up emission reduction through your project.
Okay, Patel, you cannot join us today, but if Cedric, uh, you want to have a meeting with Cedric, feel free to reach out to him. His meeting link is in the chat, and you can set up one. This is another one of Cedric. This one is more for you, and it's more on the finance part. What is the financial model assumption that investors challenge most often, and how should developers prepare for it?
Yeah, so on the project finance, there are some key assumptions that are always the same, which can be challenged. The first one is actually really the number of carbon credits on your project. So you need to be very strong on the technical calculations. And also, usually we do some sensitivities, if you have like 20%, 30% reduction compared to the base case. So this is the first one. So this is the volume. And after that, there is also the price, because the price can be quite volatile in the market. So you need to be strong in terms of having sensitivities in your as a financial model in terms of price drop. If it happens, what is the impact on your project? So these are the two main points. After, in terms of implementation, really the cost of implementation, which means the operating expense and the investment, are also something which is checked. Otherwise, yeah, these are the main things. Compared to typical project finance projects, I mean, project finance case, there is no FX, which means currency risk, because everything is usually in US dollar. So this is a good point. Yeah, so these are the key items.
Awesome. Thank you so much, Cedric. I have a question for NYC. And again, I'm sorry to no audience if I mispronounce your name. It's called Gukawa. How this is Gukawa for NYC? My question is, what makes the project plan credible and de-risks for offtake buyers, even when the project has no financing yet?
So can you repeat? Sorry, what makes the
So
project?
this is Gukawa for NYC. He said, my question is, what makes the project plan credible and de-risk for off-take buyers, even when the project has no financing yet?
Okay, so yeah, so it's Gurkanwa, right? On
Yeah,
the
yeah,
okay,
Kokawa,
so it's
yeah.
good to see you, Gurkanwa, actually. Thanks for connecting. So yeah, so it's I think the first one is a team. So it's like what the investor will check, right? So I think the first point is really the team and the capabilities of the team, and the technology that you actually develop. So yeah, I would say number one, the team. And after, in terms of de-risking, also one thing we didn't mention before is that you have a lot of insurance products. And actually, Gurkanwa is actually launching a very interesting solution in MRV. I think we should showcase this solution in our next webinars as well. And today you can also de-risk MRV with insurance products. So, so using the data to build insurance products for carbon project, it's something which is of high potential.
All right, this one
Great.
is from
Yeah, I think we are
Nairobi.
time almost. Should we take one last one?
Yeah, there are a couple of questions coming in, Chris, Cedric.
Yeah.
Please bear with me. And if you have the time, if you're comfortable with it, just let me know. I can read all of them to you. This one is from Nairobi. Thank you, Cedric and team. My question is, from your work, where does catalytic capital actually needs to sit in a climate project? At the development stage, the validation stage, or the deployment stage?
Yeah, so catalytic capital is really at the beginning, so at early stage. So it's when you develop the project. Um, Catalytic capital is so there is more and more actually. Even today, actually, there is a grant from Convergence Blended Finance for NGOs to apply. They would advise everyone to check. But yeah, usually catalytic capital is to bridge the gap until the project becomes viable. So it's really at the beginning of the project. So you actually apply for it when you are starting to develop and you have a very important development cost at the beginning, and when you and before you reach commercial feasibility or you get something bankable in the development phase, you need a lot of working capital and or capex, and this is when catalytic capital is usually made for.
Yeah, that's really good. Thank you, sir, for answering that. Let's take this last one for Nicholas. He says skill is often a critical aspect. Is that a skill below which the transaction cost makes it unfeasible?
I'm sorry, my connection is not great. If you could just repeat.
So Nuclear is asking, skill, right, is often a critical aspect. Is there a scale below which the transaction cost makes it unfeasible?
Scale, you mean, right?
Yeah, scale,
Sorry,
yeah.
my connection. Yeah. So yeah, so scale is really critical in the case of these types of projects. So it's something usually you assess when you do the study and you run the numbers, because it will depend on the volume of carbon credits and the price and the cost, right? It's really like launching a business and trying to see if you get profitable. So usually the scales, for instance, in reforestation, usually it's at least a few thousand hectares. If we see a lot of projects where smaller developers have like 100 hectares, 200 hectares. It's usually difficult to get something viable at this scale, because the cost of the registry itself will eat up all the revenue, right? So yes, there is a scale which is needed. One of the solutions is also to team up with other project developers. So we have seen uh, projects where you had cooperatives or you had a consortium of developers together, and and this way you can actually scale. Yeah.
Nicholas, I hope Cedric answered your question. And if you need to have a one-on-one conversation with him, feel free to reach out. His meeting link is in the chat, and you can always schedule a follow-up call with him to learn more about the specific question. So, Cedric, we have roughly 4 minutes to wrap this up. Would you like to take another question? There are a couple of questions that are still coming in. Can I have your consent to, to ask you?
Yeah, for sure. And maybe if also if there is any questions also, if Ursi, you could actually put in the chat the link to for the consultations, and we'll be happy to have some discussions. Yeah.
Okay. We can take this one. This one is from Mutaka from Uganda. We are seeing prices for premium credits diverge significantly from commodity prices. How do you advise a developer to set their pricing strategies when the market is moving this fast?
Yeah. So pricing strategy, I would. Um, it's a bit difficult in carbon because you don't have like a lot of. There is no public information around it, and you cannot verify because most of the transactions are actually done privately. And sometimes you see some news actually where it's not very transparent. And you see like big numbers like $50 million, $100 million, and the price is actually not very high. So I would say that the best way for a project developer is actually to run some competitive process where you ask several brokers. So brokers are publicly available, or even with AI now with GPT or Cloud, it's very easy to get a list of brokers. So you identify the brokers, you share your project with them. They almost always respond because for them, they are looking for good projects. And you ask for a quote, and after you compare, right? And after also you ask them, how we can generate more premium. And usually the premium will come from the work you do with the communities, so the impact and the impact on biodiversity. So even Vera, for instance, they have a special standard for uh, community and biodiversity projects. So yeah, so I would say that's the way to do it. A bit like the old days where you actually get several brokers to pitch you, and you get the price like this.
All right, Cedric, this is how we come to the end. Do you have any last word for the community before we wrap this session up?
Thanks. So thank you, Jonathan, also to you and Ursi for all the support to make it happen. And thanks everyone. We actually have quite some demand for the accelerator. We will do the interviews, the selection. If you have a project, please don't hesitate to share it with us, and we look forward to interacting with everyone.
Thank you so much, Cedric. And again, just to add to what I just mentioned, if you go on our website, there is a place called Project Assessment. If you're not sure where you stand, just go up there, take the project assessment. It's absolutely free and it's very quick and straight to the point. And you'll get a real-time result onto your project, and you can do a follow-up if you choose to do that. Again, to our community, UEC Cedric, thank you so much for being part of this session. And again, our community, this is all because of you. We couldn't have had all of these sessions without your support, without you being there, without you engaging with one of the questions. If you are not subscribed to our newsletter yet, please do so. We're going to send a recording to you after 48 hours. And if you are not following up on social media, please also do that so you can have real-time updates on the work that we do at Human Planet, MZN, and Tarava. Thank you so much for joining and do have yourself a pleasant time. Bye.
Thank you. Bye bye.
Bye bye.